Welcome. I'm Elizabeth Vazquez, the CEO and co-founder of WEConnect International. Welcome to this conversation on inclusive capital. Feel free to join us. This is really an exciting time to come together. Thanks to FII, we have a really exciting program. Our speakers, Ambareen, Musa with Yabi by Sycomo, and Ashish, Thakkar with Y9 Bank. These are true experts in inclusive capital. I have the good fortune to get to moderate this conversation, not because I'm an expert in access to capital, but an expert in access to markets and inclusive access for women-owned businesses that around the world are looking to access the biggest companies in the world to sell their solutions. But it's very complementary, the work of access to markets with access to capital, and so that's why I'm so excited to get to hear your thoughts about this space and how you're leading it. So maybe we could start with you. Ashish, since you're right next to me, tell us about your organization and maybe like an elevator pitch style.
Thank you so much. Thank you, Elizabeth. It's great to be here, and thank you, FII, for having us. So Y9 is a digital bank powered by AI focused on emerging markets, particularly Africa, where we're trying to bank the unbanked and the underbanked by creating access to capital, by giving loans, consumer loans, asset financing loans, MSME loans, insurance, savings products, and we're fully regulated as a digital bank, and the vision and dream is to bank 100 million unbanked and underbanked people across Africa.
That's it? That's really incredible. I mean, and how old is the organization?
So it's 4 years, but revenue generating for the last 14 months, growing at 29% month on month.
So clearly demand for what you're doing. That's super impressive. Ambareen, tell us about your organization.
Absolutely. So we've come a long way. We built the first and the largest banking, credit cards, and mortgages and personal loans aggregator for the last 12 years. We exited this business around a year and a half ago. And at the back of that, having understood that education was a real problem in the region, we've recently, after a year and a half of build, we've recently, 3 months ago, launched the first financial education platform for employees in the region, together and connected with a workplace savings plan. So 3 literally big pillars. The first one is the masterclass of personal finance. So we educate you about everything from budgeting all the way to asset allocation at different ages. We actually do a credit score check and really look at how we can give you credit. And the third piece is people are not disciplined. And as much as you can try and help them and teach them how to save and invest the money, they can't do it. So the workplace savings plan component of the platform allows employers to take the money out of the salary before it even hits the account and puts it into a mutual fund and invest it for the future.
Wow. So you are probably the person in the room that we need to all ask, why do we want to democratize capital?
Look, I think the answer is pretty obvious, but I think the multiplier effect, as soon as you hit the ground running, democratizing capital is absolutely enormous, right? The access to capital is the lifeblood of any business. It allows them to expand. It allows them to employ more people. It allows them to invest into research and development. It allows them to actually tap into any new technology that goes out there. Without capital, no business can survive even the first 6 months. Whether it's personal funds, whether investors fund, it's very difficult to set up businesses and not have access to any capital. So the multiplier effect of this is, as you tap into new technology and as you grow and tap into new opportunities, whether it's global, whether it's regional, you're employing more people. What happens when you employ more people? Job creation. Job creation in the last 20 years has been the forefront of economic growth in the US because they've managed to democratize capital. As you create more jobs, and I think, Ashish, you agree to this, and I think the impact of your business is doing exactly that. You get higher standard of livings. Higher standard of livings, the kids get a better education. Consumerism goes up, and therefore an economic growth.
So clearly there's a business case to democratize capital. What's the urgency?
I mean, I think this is, what Ambareen said was absolutely spot on in terms of, when you think about the unemployment issue is a real issue. And we're seeing what the future of jobs looks like is going to be very different. So the problem is probably going to become even worse we've seen the disruption of AI, but it's been on the intellectual side rather than physical labor. When it starts coming into physical labor even more so, we're going to have even a bigger issue, right? So I think the answer to this is really going to be entrepreneurship, right? But to really enable, empower, and inspire entrepreneurs, apart from skills and access to markets, which is what you're doing in a phenomenal way, and educating them like you're doing in a phenomenal way, I think the reality is that we do need to create this inclusive capital, the access to this inclusive capital. And without this, I don't see us solving this massive unemployment issue, which is just going to get larger, in my opinion.
So I think to add on to that, if you take a step back from an entrepreneurship perspective, there's another component I could add to it, which is regulations and policies, right? So it's great, you can boost entrepreneurship as much as you want, but at the end of the day, most entrepreneurs will not get access to capital in the traditional way. They won't be able to go to the bank and get money if they're not 3 years profitable. They won't be able to have lenders. Lenders, as a matter of fact, are risk averse, right? They try and take as least risk as possible. So on top of the entrepreneurship, I would also add allowing fintechs and regulations to really promote the accessibility to capital. The money may be there, but how do you make sure and allow that money to be deployed in the right places to non-traditional entrepreneurs, as you say. And I think if you bring it back to the region, to me, is from a technology perspective, we've grown, right? I mean, you see those fintech companies growing out here. It's absolutely phenomenal, both in the wider region, but I don't think the regulations have caught up yet. And by the way, that is totally fair. I mean, regulators are meant to hold the sanity of the financial ecosystem. But then again, I think that gap definitely needs to close. And as you have entrepreneurship push, you have policies and regulations push towards minorities, towards women, I would say, very important segment. I think there's more women entrepreneurs in Saudi than there is in the US. And if you guys have ever heard that,
No.
It is insane. The number of women entrepreneurs in this country is gone rocket high. And it doesn't have to be the $100 million company, right? Growing income in a household, you don't have to build a $200 million or $1 billion company. It's actually the smaller entrepreneurs that makes a sustainable living out of it that makes the difference to the economy.
And I think that's what's so frustrating, your point. There's plenty of money. We're not lacking in the amount of money available in the world. Why is it so few that need it the most don't have equal access and opportunity to compete for that money and to win that money, whether it's markets or access to finance through capital sources, equity? Give us a concrete example, each of you, of how you're democratizing access to capital.
So what we've done is the biggest challenge obviously for access to finance has been the lack of data, right? We have particularly I'm talking about Africa, but we have such a big informal sector that how do you get access to that data? So the way we've structured it is we've created a membership model where we take a very small fee on a daily basis from 20 cents to 70 cents a day. And we give people a 4G smartphone with our Y9 bank account preloaded, with our AI credit scoring and decisioning engine pre-built in, with 5,000 free ebooks to boost digital literacy for them and their kids in the local language and in English. And the whole idea is that 100 days later, we're able to access that data, score it, and give them other loans such as cash loans, electricity bill loans, school fee loans, fuel loans, and broaden that even more so, right? So I think, and by the way, our sources of data don't only come from our own source, which is currently the weakest source, which will be the strongest source of data, but we've also put servers in the telecom operators to get the data from the telcos in terms of how those users are using, and plus the credit reference bureaus. So we've got 3 sources of data, which are then 2 of our AI engines literally scores and decisions. So we're able to give almost, right now we're small and growing, but we're almost giving about 20 to 30,000 loans a day, right? And so, but very small, but they're able to turn around quicker. So that, in my opinion, is one small way of doing that.
One small way. It's a range of things. It's not just access to capital. It's actually building creditworthiness and credit scores so that they can access even more. That's huge. I'm so impressed.
But I think the one thing which should not go underserved in terms of what you're doing is, I call it break the cycle.
Yeah.
Because the first generation can access a microfinance, they can give a better life to the younger kids. and that breaks the cycle, then the kids do not turn out exactly the same as the parents. At the end of the day, they get a better education because access to capital gives them a higher level of education. They get one level higher, and then the generations keep going that way. So to me, breaking the cycle is absolutely critical in terms
Agreed.
of access to capital.
So give us an example of something you're doing to help with
Yeah,
that.
so we build a lot on education. We actually teach, we're the masterclass of personal finance. So the two ways we do it, we teach people alternative investments, right? There's a typical put the money in the bank and wait for it. Well, you're losing money on an inflation rate. Put that capital to work. And the more people put capital to work in the economy, whether it's through the stock market, the emerging markets, whether it's through angel investment, whether it's through other methods and alternate investment, that capital goes back into the economy to play, right? Because if they live in the bank, again, the banks will only access this capital and deploy this capital in a very traditional way, which we've seen does not really build as much economic growth as we want it to be. We have a whole session on angel investment. There's a lot of people in this region who does have a small ticket here, small ticket, and they could put to work in younger startups. We started 12 years ago, we started with $300,000 and little tickets of $10,000 to $25,000, right? But look what's happened today. We had 150 people by the end of it, and we created so many jobs, so many lives, so the multiplier effect comes through it. So the first part is really educating the population. What are the alternative investments that they can make? The second part is, which is the workplace savings component, where the employer or the employee can tell the employer, before you pay me, put 1,000 dirhams or 1,000 riyals out and invest it. We actually teach them, well, in which components they can invest their money. And so driving that savings, again, into investment and bringing back into the economy.
So these are fundamental concepts that you're taking action on. Do they work in certain places under certain circumstances, or is this a lot of what you're talking about could be universally applied over time?
Oh, I think it's totally universally applied, but the US is something that's a norm. Remember, we are a few years behind based on regulation and based on all of that. I think the workplace savings is, except if you're a major international company, it's not. And remember, 90% of this region's economy are SMEs, right? And so it's a very different region, a very different economy than everywhere else. So based on that whole workplace savings environment is a new culture that is starting to come in play.
Yeah, I think in our opinion, it's obviously our model is kind of replicable in emerging markets, but each country has its own, has its own progress that it's made. The credit reference bureau is probably longer established, better data that you can tap into. But generally, yes, it's generally universally applicable, especially on our continent in Africa, but generally in emerging markets, I think.
So I'm interested in action, as are clearly both of you. So we've talked about theory, we've talked about what you are doing individually. What are your calls to action? What are things that the policymakers here, that the private sector, the civil society players, what are some specific actions that they can take that would support your vision?
I think for me is a private-public sector partnerships. I think we need to really build up on that, and I think catching up the regulations with the innovation that this region is seeing in tech, especially in fintech. What you'll see is you have loads of companies and fintech companies who are trying to do exactly that, trying to get people access to capital. But unfortunately, a lot of them are still sitting on licenses of traditional companies. So how do we break that connectivity and allow them to fly and flourish on their own? Fintechs are much more agile. They've got the latest technology. There's no legacy system. So I think the first piece would be, how do we keep the regulations up and coming and getting it closer and closer to the tech that's already been there? And second thing I think for me is the policies, right? I think you need to get, when it comes to access to capital, AI technology in terms of new credit score to allow that deployment to happen with people who are not bankable. Then that would get into a correlation between the telcos, a very, very important stakeholder, because they have more data, I think, than anybody else has on anybody who doesn't have a bank account. I think you've got the telcos, you've got the government, and you've got the banks, and you've also got the private sector. If these stakeholders get together and really have an agenda, I haven't really seen democratization of capital as an agenda on any of the regional agendas that we've put through. There's been a lot of the other stuff, but I think from an agenda perspective, it needs to be set up very quickly.
So an ecosystem approach. Let's stop focusing on some areas where we just have massive amounts of efforts, and then there's deserts where we don't have, support for things that have to happen. So what are your calls to action to create this ecosystem support that is so urgently needed?
I think, Elizabeth, you said it earlier, and I think it's the action, right? I think even when these dialogues start taking place, to Ambareen's point, it's about getting them to execution and really actioning them. But just to echo what Ambareen said about regulation, I think it's really important for us. Every market we go to, we need to get licensed separately, completely. We need to do an education of what we're trying to do because they've never seen this kind of scaling taking place. Extremely happy about it, but very nervous about it too. So how do you kind of go through that? But then you need to replicate that in every country we go to. I mean, remembering Africa is a continent, and we're 54 countries. So every market then becomes a unique thing. I think calls to action, in line with what my spiritual leader Moderator Bapu teaches, which is truth, love, and compassion. I think people need to be equally commercial about it, but investing in emerging markets, I think, is a really important element because we were talking about this earlier, that there is generally lack of inclusive capital globally, but then when it comes to emerging markets, particularly Africa, we're really misunderstood as well. And I think the fact that we're misunderstood becomes a bit of a double negative in that respect, where we're not able to kind of do that. So my call to action would be invest more in emerging markets, be it personally, be it institutionally, but invest more particularly in Africa.
Because it's not only good business, as you've said, there's huge returns, you're seeing it, but the multiplier effect, the impact it can have. And I selfishly now want to ask you some questions about how access to capital links to access to markets, because when these entrepreneurs sell their stuff, that's when I think the banks chase them and when the investors chase them. So would love your thoughts on how do we do a better job with that ecosystem strategy, connecting these entrepreneurs with access to markets, and the ones that are selling, how do they make sure they have the right kinds of capital that will really help them succeed and not become hugely indebted and not be able to survive?
So I think there are, the region is quite different in that model, right? Every region is very specific, but if we take this region as a whole, entrepreneurship on an angel level is actually quite common. I think that's not where the capital access becomes. It's when you actually got traction, that's where the issue starts. I would say between Series B and Series C is where it becomes very difficult to raise money, right? And I think there's a couple of reasons, because there aren't that many people raising Series C, so therefore it's a chicken and eggs, right? Why would capital of the size of Series C and Series D be here when there's hardly any companies who reaches that scale? But then if you take a step back and go, okay, well, why is that happening? Then it's because it's the size of the region. What's the size of the market? The market is still small, and the reason it's still small, it's just because you've got different jurisdiction. And if we do talk about capital and financial services companies, every single country you expand into is a whole new jurisdiction, is a whole new company. You go to the US, it's 300 million people, here's your market, right? So I think there's a couple of things to me is, one, how do we allow for a regional aspect to these jurisdictions? So when you start a company, wherever you start in the GCC or MENA, how do you access other markets? When you access other markets and you can have that traction easily, that's where the capital comes. Capital is chasing traction. It chases size of market, it chases revenues, right? Yeah. But to make that revenues, you need the access to markets. And I think that's where WEConnect potentially comes in a bit handy. So yeah, it's...
Excellent. Fantastic.
So Elizabeth, if I can actually flip the question on you, because I think what you're doing as WEConnect is phenomenal, and obviously you're seeing so many different markets. How many? Over 150 countries?
135.
135 countries where you're getting women entrepreneurs and giving them access to real clients, which changes then, like you said, it changes the appetite for funding, right? How have you seen that transition? And over the years, especially from women entrepreneurs who have just got into it to the ones who have been in it for a few years?
I think you're exactly right that it's one thing to have them access buyers that they never had access to, and the knowledge about what is it the world buys. Again, plenty of money being spent on products and services, $77 trillion global economy, plenty of money out there, but do underserved, underutilized communities, women and other communities that you mentioned, do they know what it is the world wants and needs? And then once they do have that access and they start to sell successfully, they absolutely need finance, access to capital, inclusive capital, patient capital, all the things that you are doing. And I think that's why you two leading in this ecosystem is so critical for the success of all of these communities that you're serving. And we have a minute left, so I want to turn it back to each of you. Any parting thoughts, words of wisdom, calls to action that you want to share?
I think as much as we talk about, regulations are still quite far away. I think we've come a very long way as a region. I can't speak for Africa, but I think there is a lot more to do, though. We've come very, very far in the very short span of time. If you see this region's been growing phenomenally and significantly in the last few years only. We haven't had 200 years.
Yeah.
I mean, compared to every other society, we've had a couple of decades that really things started being pushed through. So I think what we've done in the last 20, 30 years is enormous. Having said that, though, I think my message is let's continue pushing through. Let's still encourage people to invest alternatively. Let's lobby. Let's get the different stakeholders together. And to me, talking is one thing, but let's put some real agenda on the table and get the stakeholders together to push forward the push of regulations. Because I think once the regulations are open, the innovation is mind-blowing.
So I'm really, really optimistic. I'm very excited about what the future looks like, particularly with the African lens. I think there's a lot of foundations have been built. I think our governments are very passionate about making a change. I think apart from impact capital, we're going to start seeing a lot of traditional sources of capital come as we demonstrate and prove that things work. So I think let's be bolder, let's be bigger.
Thinking big, and I think that's what FII is such a great example and embodiment of thinking big and then taking action, bringing together all the world's key stakeholders in the investment space and everyone in that ecosystem to make a difference, share best practices, innovate. And I agree, the potential in the Middle East and in Africa in particular is breathtaking. And I am very, very grateful to each of you for your leadership in this space. So please help me thank these two incredible leaders for what they're doing to make a difference in inclusive capital and beyond.